All right, what's going on? Welcome to the channel. In this video, we are going to be breaking down the exact strategies that we've used inside of our coaching program, the Inside Inner Circle, to help our clients go from $0 to $35,000 in business credit, and even from $35,000 to as high as $325,000 plus in business funding. Now, this is going to be a complete no BS video on how we've helped some of our clients get access to business credit in as little as 7 days. And so I'm going to take you over to the other side where we are going to break down this framework, who it's for, who it's not for, and toward the end of the video, we're going to be breaking down the exact banks and products that you should be looking at if you are looking to get similar results to what we're going to be breaking down. Now, this is a training style video. I've been getting a lot of feedback from you guys telling me, hey, Irv, I've been appreciating more of that training style video where you break down the frameworks that's been working for some of your clients. So it is jam-packed with information, so I highly recommend it. You may not get all of the information on the first round through, so you always want to rewind, you want to bookmark the video, and this is maybe something that you want to come back to, because again, you're maybe going to listen to something the second time around that you didn't catch the first time around. So let's go ahead and jump right into the content. How to get business credit in just 7 days. Now, this is the exact framework that we've used with our clients where they've rinsed and repeat this multiple times. Some of them have gone through this in their first round of business funding. So whether you are a new business or an existing business, this is how some of our clients have gone from 0 to 35,000. This is how some of our clients are gone from 35,000 to their first 100K in business funding. And this is how some of our clients have used this process multiple times to get them over that $250,000 mark. Now, full disclosure, I don't want you to think that, in the next 7 days, you're going to get access to, $250,000 because one, I don't know where your personal or business credit profile is. And two, this method right here, although it can be used multiple times, it can take up more than 7 days. So just a heads up, right? Because I don't want someone looking at this and saying, oh, I want to get access to 300K. Remember, it also depends on how your business is structured, which we are going to be breaking down here in this video. So first things first, and I know that this goes against like all the rules that people say about YouTube. Make sure that you keep someone engaged. Make sure that you hold them as long as you can in the video. Look, I don't like getting my time wasted with people. I don't like wasting people's time. I think that time is the most important asset that we have. It's just something that we can't get back, right? And so because of that, I don't want to hold you if this isn't for you. So first things first, if you're looking for EIN only type of business credit, although that's out there, this is not going to be the video for you because we are going to be breaking down a PG method, meaning you're going to be leveraging your personal credits on behalf of your business credit, or kind of like a blend where you can use a little bit of your business if you already have it established, a little bit of your business credits, and you can also use your personal credit. But your personal credit, again, for the purpose of this framework that we are going to be breaking down, it is going to heavily rely on your personal credit. And so who this is not for, you see it on your screen right here, but I'm going to be diving into that. Again, like, I won't be offended. You can go ahead and come back to this video. You can go ahead and turn the video off if you feel that you don't meet this just yet. Now, this isn't an automatic denial, right? But it is going to slow you down past that 7-day kind of like baseline that we are aiming at. So first things first, so for those of you guys that decided to stick around, first things first, if your credit is under a 680, right? Then this method is not going to be for you. Now, if you're wondering which credit score are they going to look at, they typically, and when I say they, I'm talking about banks and lenders and credit unions. They typically look at the tri-score, so they'll take a look at TransUnions. Maybe some will look at Experian, and others will possibly look at Equifax. But for the most part, you want to be paying attention to the FICO 8 scoring model. Now, there's over 15 different FICO scoring models, but the one that banks are typically going to use for this type of funding right here is going to be the FICO 8 model, right? They haven't transitioned just yet into the FICO 10 or the FICO 10T, so just a heads up for those of you guys that have been keeping up with it. We actually did a full case study on that inside of our Inside Inner Circle, our high-level program. But I'm telling you the same thing that I told them, right? They haven't plugged that in just yet, so you can take advantage of this exact method because it's still a go. Those with collections, charge-offs, repos, late payments on the credit in the last 24 months for late payments. If you have any collections or charge-offs, period, it's going to be a no-go. Less than $3,000 in revolving accounts. Now, this is total revolving accounts. And again, this is a baseline just to get you in the door. This doesn't guarantee you an approval, right? It's just a baseline to at least get you into the door and get you talking about business credit, to get you possibly in the game about getting maybe your first business line of credit, right? So at least $3,000 in revolving, not even business, in revolving personal accounts. It doesn't have to be business just yet because that's the purpose of this video right here. Now, again, this is not including, because I had to state this, it's important. I get this question a lot. Hey, Irv, does that mean that if I have maybe a $10,000 Macy's store card, if I have a $10,000 Rooms to Go card, 100% no. This is not going to include a store card, meaning they're not going to use that as a data point in your favor. You want to have a revolving account that's a specific bank or to a specific credit union. Store cards, even though sometimes, or even though they're essentially underwritten by banks, right? It's not going to be considered a revolving account that's going to work in your favor. Less than 5 open credit lines. So if you have less than 5 credit open lines, again, this is going to count against you. You want to have at least 5 if you have maybe an authorized user, or maybe you're an authorized user for one, and then you have 4 trade lines that belong to you. That's a good place to be. If you have maybe 3 accounts that you have that belong to you, and then you're an authorized user for 2, you may want to start bumping that up, because again, if you have too many accounts that you're an authorized user under, then that's going to count against you. If your credit history is less than 3 years old, and by credit history, I mean the age of your total credit, right? So let's say if you have, let's say the 5 accounts. So you have 5 accounts that are 4 accounts that are 10 years old, and 1 account that's maybe 2 years old, then the average age, give or take, is right around 8 years old, which is a good place to be. If you have too many hard inquiries, that's going to be a no-go. If you have more than, let's say, 3 to 4 hard inquiries per credit bureau in the last 6 months, I recommend either A, let those age, or B, take those off, which is something that we do a lot with our clients. We tell them, hey, as you're going between round to round, right, one of the things that you want to do is, even though having business credits and using those business credit lines isn't going to report, or is not going to report back over to your personal credits, unless you like default, you're late, things like that, but we're responsible business owners, right? And so the only thing that is going to reflect is that hard inquiry. A lot of people go back in and they remove those hard inquiries so that they can segue into another round of funding, and they rinse and repeat this process. And then lastly, and this is going to be a huge, I possibly would even put not a hashtag, but an asterisk next to this, and I would say no more than 40% utilization. Now, if you're using it for the day and day, like, you're fine. That's what the whole purpose of getting business credit is, right? Even though that utilization is not going to report over on the business side. Again, I'm referring to personal credit utilization, no more than 40%, especially as you go into a round of funding and as you start applying for business credit cards, business trade lines, business lines of credit. If you are trying to get the most out of this, and I did put an asterisk on that, less than 10% when you go through a round of funding, which is also what we like to encourage a lot of our clients to do. So let's go ahead and start here. So hopefully I didn't scare too many people off, but if I did, good, right? Because I don't like wasting anyone's time. But if you stuck around, let's go ahead and get to work. So the first thing that you are going to want to do is you are going to want to pull up a copy of your Tri-Merge credit score, or your Tri-Score, right? What that means is you're going to want to look at your FICO Experian, you're going to look at your FICO TransUnion, and you're going to want to take a look at your FICO Equifax. Now notice that I didn't say the Vantage score. The Vantage score is more on the Credit Karma side. Now, I have nothing against Credit Karma, right? But again, if we are thinking about this, and the whole point of this video is to have you thinking and knowing how an underwriter and how a bank is going to look at your file, you want to know, what are they going to take a look at, right? So if I am studying for an exam, and then the exam is talking about, let's say I'm studying apples, how apples are farmed, how apples are eaten, how apples are juiced, and then on the exam, they start telling me about oranges, it's apples and oranges. Like, it's doing me a disservice. And so I want to know exactly what banks are going to look at, which is what I'm providing for you in this video. So you want to pull up your credit report, right? And the reason you start there is because you want to take a look at everything that I just mentioned right here, if you don't know this information off the top of your head, and then you want to have that at the top of your list. Now, if the more things you already know about your finances, which is always important to look at your bank accounts, look at your accounts receivable, look at your accounts payable, take a look at how much money has gone into your account, take a look at how much money has gone out, take a look at your credit report. Like, when I was in the process of repairing my credit, when I was in the process of building my credit, I was looking at that thing daily, right? And then obviously, as you start to build it out, you can kind of wean off a little bit, because at that point, your credit's frozen. You're not opening too many accounts. You're not necessarily in a round of funding. And so you don't have to pay attention to it as much. But especially as you're kind of like in that building process, or you're in that transition period where you're looking to get funding, I would be on a hawk looking at that. And so the more you know about your business, the more you know about your personal finances, the faster you're able to move through all of these items, which ultimately you're also able to start working down that time, right? That 7 days, you're able to start working that down. So you next want to organize the business, or you want to organize, if it's for those of us that have more than one business, you want to organize which business you want to fund first. Now, Irv, which business do you recommend that we go for funding? Well, that's going to depend. Which business, one, has been open the longest? That's a route. Which business has been driving the most revenue, even though it's not necessary, but it does help? Which business is driving the most revenue? That's a route. Which business already has an established business bank account? That's major right there. So I'll give you an example here. We had a client that they had two businesses, right? So business A and business B is what we'll call them. Business A had been open for a little longer in terms of how long he was doing it for. The only issue was he was kind of doing it under the table, how most of us start, right? Where he was killing it. He was collecting cash. He was doing about $10K a month, but it was literally mattress money. So it was cash transactions. It was going right into his mattress, and he wasn't depositing it, didn't have an LLC, but everyone just knew what he did for, in terms of business, right? And it was a legal business. Like, I don't want you to go in somewhere and thinking, oh, he must have been doing something crazy. No, it was a legal business, right? But business B, even though it wasn't generating as much revenue, he decided to do it right. And so he got himself an LLC for his state. He got himself an EIN. He got himself a business bank account with a credit union, and he also got it with a local bank. And he just started saying, hey, this is how I'm going to accept payments for this business right here. And so all the transactions were virtually online, and that payment processor would just connect right into his business checking accounts. I want you to guess, and you can put it in the comments if you like, but I want you to guess, did business A have the best chance of getting funding, or did business B? I'll give you like 2.5 seconds, right? And the answer to that is going to be business B. The reason for that is because it already had the established entity, meaning the LLC. It already had the established EIN, the employer identification number, which is like the social of the business. So the older that becomes, the better chances a business has, again, all things being equal, with the personal credit being on point, like we're breaking down here, of getting more funding, right? And then in addition to that, there was also revenue coming in. And even though it wasn't the world's biggest revenue, there was consistency coming in, which also helped with building the relationship on the credit union side, right? And so that's why you want to organize your business first, according to everything that I just mentioned. And so let's go ahead and move into the third part here. You want to leverage the bank. Let me scroll this down so we can see it. You want to leverage the bank or the banks and the credit unions that you already have a relationship with, kind of like what we just finished touching on. Now, if this is new to you, and for those of you guys that have been listening to my channel for some time, then you guys have possibly heard me mention this before. But if you're new here, this is essentially a bank or a credit union that you open an account with and you start making natural transactions with. Notice that I said natural transactions with, right? I know that there's videos out there where someone says, hey, just go in there and deposit, X amount of money, let it sit there, and then go back in and apply for, let's say, a business credit card, or go back in and apply for a business loan. While that may work, we've found that what works even better than that, and what helps pretty much get the most squeeze out of the orange, is going to be you using that relationship to pretty much the biggest advantage, which means you're going to have natural transactions coming in and coming out of it. And so you want to set up basic payments like, hey, instead of me just using my personal debit card that's maybe over on my other bank that's separate from my business account, let me pump gas with my business, let's say, debit card, right? Let me start pumping. Let me make a payment with let me see if I can use my internet that I use to keep my business running, and use that obviously as a tax deduction, as a tax deduction later on anyways. And that way I can kind of keep separate, hey, this is a business expense, this is a personal expense. And then also use that as a form of the bank seeing, okay, they're actually utilizing us for their transactions as well, rather than just having money sitting in there, right? Now, you do want to pay attention to this, because the last thing that you want to do in the first 90 days or even in the first 60 days of you being inside of, let's say, a brand new checking account with a business, is you never want to fall into overdraft. The reason why you never want to fall into overdraft is because that's going to count against your bank rating. Now, the bank rating is what you get when you open a business checking account. And so if you fall, let's say, in an overdraft or a negative anytime within that first 90-day period, or in any 90-day period, if you've already been banking with them for some time, then it's going to hurt your chances of getting any type of business funding with that bank or with that credit union. Something to pay attention to. Fourth, you want to monitor the banking liquidity. So this means that some banks, right? I want to slow this part down because it is important. Some banks are going to go solely off relationship, meaning how long you've had that account for, right? Typically, most banks like that, but there's a second piece that you also want to pay attention to when you're kind of moving in this direction, and that's the liquidity. And so if you already have, let's say, Chase, and you've been banking with them for 3 years, and you already have maybe a personal checking account with them, haven't gone into overdraft, you always, let's say if you have a Chase personal credit card, as an example, right? It doesn't have to be Chase, but as an example that we all know, you've never been overdrafted. You're always making your personal basic credit card payments on time, even if it's the bare minimum. You're never behind on your payments. You're constantly getting, if you've been using that kind of like a personal account, so if you still had a job, or if you've kind of still been doing business where you are still collecting funds, even though, again, remember, I hope that you separate it, but let's say that you'll deposit some funds that you get from being out on the road, doing some business, and then you're depositing that into your main accounts. Even though it's on the personal checking side, would it look better on the business checking side? Yes. But that liquidity starts to help you in regards to the strength of your file when you do decide to apply for business credit. Again, with that bank that you've not only been building a relationship with, but also with that bank that you are the most liquid in. I can tell you Bank of America isn't as strong in terms of liquidity as you would have more so with US Bank and with Chase. Chase and US Bank, from what I've seen dealing with some clients, is they typically like to see more of that liquidity. And what I mean is anything over 5K, 5K, 10K, 15K, you're sitting golden with Chase, with US Bank. And then lastly, you want to monitor your numbers. I'm right here on the fifth and final point. You want to monitor your numbers. And fifth and final point for this section. All right, we're not over just yet. You want to know your numbers. How much revenue is your business bringing in? How much net of that gross are we actually keeping? How much is our taxes on what we're paying? How much is our employee expense if you have any employees? How much is our product expense? Right? How much is, or where's our, let's say, business credit score at in comparison to our personal credit score? Like if I have an 80 on the Paydex score with Dun & Bradstreet, if I have an 80 with Experian, and then let's say I have 500 with the Equifax score, then I know that that's pretty solid, right? But what if I have, let's say, a 650 across the board with my personal credit? That means that I may need to see, okay, why do I have a 650 on the personal side? Do I carry too much utilization? Should I maybe work on removing a collection? Because it's a nice delicate dance, which I was having a conversation with a client about this, where I said, hey, it's like a delicate dance. You want to, yes, have both, because some banks are going to look at your Equifax business and your Equifax personal, sometimes as like a double scoring model, right? They'll kind of blend it together. We're starting to see that more and more often now, especially if you start going into like into the SBA route of loans. But the reason why you want to have both is because you never know which one they may pull. Typically, when starting out, they'll look at the personal, but as you start building out the business, the personal doesn't have to be as strong, because now your business starts to carry some of that weight as well. So what type of business credits can you get? Now, there's essentially a couple of different ways you can go about this, but again, for the purpose of this video, since we're going the PG route, I try to keep it as just core, simplified as possible, because I think that at the core, this is essentially what you could and should be looking at if you are in business right now, or if you're planning on opening a business. So if your business is under 6 months, meaning your LLC, your EIN, you got those docs ready to go, right? And you want to go out for some business funding, you want to start applying for some business credit cards, some business lines of credit, typically, right? And we're not discussing fintech, we're mainly discussing main banks, regional banks, and credit unions. business credit cards and no doc loans is most likely going to be the route that you're going to land in. Right now, we've covered no doc and low doc loans in the past, but a quick overview is no doc loans is they're essentially not going to take a look at anything like profit and loss statements. They're not going to take a look at anything like taxes. They're not even going to ask for bank statements. Right now, not every bank offers this. We're going to get into some banks here in a few of what products they have. Not every bank offers this, so which is why you also want to get acquainted with low doc loans, which most of them, or in some cases, more of them do than no doc loans. Low doc loans is essentially going to be at least 6 to 12 months, sometimes 3 to 12 months of your most recent bank statements. Sometimes they'll ask for a profit and loss statement, and then they'll typically ask for a 1-year tax return since you've been in business for at least 6 months, or you're kind of going into, let's say you started business on month 6, or let's say June, carried over into January of the following year. Like that January when you go to apply for, let's say, a business credit or a business loan, they'll typically say, hey, you probably already filed your taxes. If you did, you can get a bump in how much you'd qualify for, because typically the no doc loans cap out at $50K. Some of them go to $100K where they cap out at, but it usually caps out at $50,000. And then low doc loans go over $100K, but they usually cap out at right around $250. And then you have the second option, which is 6 months to 1 year of being established. At this point, you're going to be able to get things like business credit cards, no and low doc loans. Say that 100 times, and BLOCs, which are going to be more optimal. Now, I didn't include any type of SBA lending or funding in here because that's a completely different animal compared to what we're talking about now. Again, we try to keep it at its core with banks and credit unions. And then lastly, we have a business that's over 2 years old. At that point, you're looking at term loans, going up to 5 years, right, which are some pretty solid products. You are looking at some some full doc loans, meaning you can now show, because those go up to $1 million plus, really, especially if you're looking at a line of credit. Like I know PNC, they go up to $3 million on a business line of credit if you've been in business for at least 3 years, and you can start showing some of those statements. This is why, and kind of like a pause here, this is why I usually, again, always have that conversation with my clients. And you're going to have this conversation with your CPA, right? But I'm just giving you my 2 cents on this subject. This is why you always want to be careful, even though it may be sexy to write off everything, right? And not have to pay any taxes back, or not have to owe as much as maybe your business does to the IRS. I know that there's legal loopholes out there, but always keep in mind that if you're trying to leverage some business credit on the back end, you're going to have to leave a little bit of skin on the table on the front end with your taxes. Right now, I'm not telling you how to run your business, right? Let your accountant take care of that. You and your accountant, let you and your your CFO take care of that. But I will say it has held people back from getting multiple 6-figure funding that had the revenue, but when they actually went to go, let's say, show some of the net on that with some more intricate products, at that point, they just weren't able to. And so just something to keep in mind as you're going through this process. And so some banks to check out, I have some options for us here. Again, some of the banks, I think I have 5. Yeah, I've listed 5 on here. The reason why I listed these 5 is because, one, for the most part, they're located across all 50 states, with the exception of like Citizens Bank, Truist, and PNC, because those are more of maybe regional banks, right? Or maybe they're not as popular. But for a fact, Chase and Bank of America, those are top tier banks. So I'll start with Truist. Truist, they'll give you up to a $50,000 BLOC, right? So a business line of credit. And in addition to like having that same hard inquiry on your credit, you can also what we call double dip. So now you can go back in for a business credit card. But usually the way that I recommend it is get the business credit card first. With any product that you get the business credit card first, and then go back in for additional funding. So if you got the business credit card, and this is typically what I do with my clients, hey, we'll get the business credit card. Let's say it's $25K. So we'll have a $25K with, let's say, bank like Truist. And then we'll have a $25K with like a bank like Chase, like an Inc., right? We're now at 0% funding for like the next 12 months, or depending on what special they're running. Typically, it's 12 months, right, for most banks. So we'll be at 50K, and then we can go back in and say, okay, do they have any additional 0% business cards, right, that we can either A, go ahead and use that same hard inquiry on right now, right, since they are hard inquiry sensitive on the personal side, or can we go back in, depending on how old and how well structured our business is, can we go back in for a business line of credit? So if we're dealing with Truist, typically that's at least 3 years, right? I've seen them go down to 2 years, but that also would depend on revenue at that point, right? But with business credit cards, that's typically going to go off of stated income. So that's going to be Truist. With Chase, again, if you're trying to get a business line of credit, I haven't seen them go anything under 1 year of having a relationship with them. But with a business credit card like the Chase Business Inks or the Inks Cash, right, you can go ahead and utilize that liquidity method that I shared with you earlier, because it is a powerful one where you can season that account by depositing some funds, having your business account, doing some natural transactions, making sure that your credit's on point, and then going back in there. Now, do you need that in order to get some business funding? Like, just answer me this question. Can I go in right now? I just finished watching your video. My credit's on point. I'm running some revenue through it, or even I have stated income, like I have some pretty good projected revenue that I have in mind that we're going to be hitting. Can I go in right now? The answer to that is going to be yes. Now, with Chase, should you at least let it sit for at least 7 days? In terms of the deposit that you make, yes. With a bank like Chase, if you let it sit a little longer, it's only going to help you in the long run. But if your whole goal is to get some type of business funding going right now, then yes, you can go ahead and apply with Chase. Same thing goes with Bank of America. I like Bank of America as well. And really, I'd have to say this, because inside of our program, we have a relationship manager with Bank of America. We have relationship managers with banks, and we're working with credit unions, right? That we're also looking to bring on board. But I say that's because it helps streamline the process way faster than just trying to, let's say, shotgun an application on your own online. So for these methods that I'm giving you right now, I recommend take a weekend. Go, especially, and it's easier if you already have an account set up, right? But even if you don't, you can still apply with them on day one. But go in and apply in person. Go in, shake hands with the bank manager. If you already have a relationship manager, I will talk to them. We have them in our program. We introduce them to all of our clients that come to the program once they're ready to get funded, right? That right there is like a game changer, because they're able to help you kind of bypass all the BS that people typically get when they're just trying to apply for stuff online, and they don't even know what they're applying for. They're just hoping that something sticks. Fourth, we have Citizens Bank. They have BLOCs that go up to $250,000 with minimal time in business. So with them, I haven't seen anyone get approved for anything near 250 or even over 100K if you've been in business for less than 6 months. Now, they do have, again, those business credit cards, 0% interest for at least 6 months. Sometimes I've seen them move it up to 9 months, but 6 months with Citizens Bank, and then you can stack that with a BLOC if you've been in business for well over 1 year. The reason why that's important is because they are going to go off of a soft pull over on the Equifax side. So something to keep in mind. And then lastly, we have PNC. We've actually seen quite a bit of success with PNC. Their BLOCs go from 20K to 100K unsecured, meaning you don't have to use any collateral. They do have some business credit cards as well. You can check out 0% interest, 12 months. But the reason why I'm bringing up the BLOC is because a lot of the comments or the messages that I get are from real estate agents, real estate investors. We get messages from construction construction owners, company owners, where they're trying to maybe get better gear for their workers. They're trying to get better equipment financing or better equipment options, right? And so a lot of that stuff is cash intensive. And because of that, PNC would be a fantastic option, because 20K to 100K unsecured means that you don't have to put up any collateral. Now, if you've been in business for some time, this is a little bit more high level, right? But if you've been in business for some time, $100,001, right? $100,001 to $3 million is what you can get on a BLOC with a business line of credit with PNC Bank. But at that point, you will have to give up some type of collateral. You will have to give up you will have to put up some type of property or some type of equipment, right, of market value that they deem is worthy of being able to pretty much kind of put a lien on, where in the event someone defaulted, they would be able to kind of get some of that money back from there. So just something to keep in mind for some of my more high-level entrepreneurs that already have that set into place. And then let's go ahead and close it out with this, because it is important. These are some things that you should watch out for. Now, before I pretty much bring this whole thing to a close. If you found value in this content, just leave a comment down below. Let me know, Irv, you did your thing on this one. Like, you looked out for us. We enjoyed it. Drop anything down there, right? Because it does help this content reach a larger audience. But again, I only want you to comment down below if you found value in the content. If you didn't, keep enjoying it, right? Things to watch out for. Your business name isn't already taken. This happens quite a bit, especially in the retail space. If you guys maybe have a logo, if you have maybe a brand that you're promoting online, just make sure that even though you might have the name like on IG, you might have the name on Twitter, you might have the name on Facebook, you might have the name on, let's say, YouTube or TikTok, just make sure that the legal name isn't taken or like it's not trademarked, right? Because that would suck. You built up, all this brand equity to then kind of lose it on the back end because you can't get the LLC for it, you can't incorporate it, and you can't trademark it. So something to keep in mind. Again, if you've already done all of this, that's going to help fast track you in the next 7 days where you can just start hitting a weekend and start going after those banks that I just gave you or maybe some other banks that you already have in mind, right? You have an EIN specific to your business ready to go, right? If you have an EIN that's specific to your business ready to go, then you are going to be in a really good spot. Now, I don't want you to confuse this with an EIN that you maybe have for another business, and now you're trying to change names, you're trying to transfer it. Look, that's going to put you well over 7 days, right? Like, I'll just be candid with you. If you have an EIN that's ready to go, you have your LLC that's ready to go, like, you're locked and loaded, let's go out there and let's go get some funding. No significant UCC filings, blanket liens, or specific liens have been placed on your business credit profile or on your assets. Similar to what I mentioned earlier, every now and again, this happened more with like PPP loans, EIDL loans, where they have like these blanket liens, meaning they just put a lien on your kind of like your business credit profile, where you can even see it. Like if you go on Nav or even Credit Signal on over on Dun & Bradstreet, you'll see where it shows the lien, right? Can this hold you back from getting access to business credit? It depends on the type of lien, and it depends on the type of business funding that you're trying to go for. So if you have, let's say, some real estate that you're trying to collateralize, or if you have a business vehicle or business equipment that you're trying to collateralize, and there's already a primary UCC filing on there by maybe another bank or another financial institution, then yes, that'll 100% slow you down. At that point, you may want to take a look at some more unsecured stuff. But all things being equal, if you have a UCC filing, it's not always the end all because you can always work to get that off. We show our clients how to do that all the time. You can search how to do it yourself, or you can search for the UCC filing yourself right on the Secretary of State, or again, right on your business credit profile through Nav. And then lastly, you want to make sure that you are using the right industry code for your line of work and that it's low risk for each bank. Now, I did a training. I won't spend too much time here because we're wrapping it up, but I did a training on YouTube that we published on YouTube on business credit cards, the NAICS codes and type of codes that you want to use. Every bank is going to be a little bit different, right? And that's one of the things that we really try to hone in with our clients that have multiple businesses, where, hey, just because something worked for, let's say, business A doesn't necessarily mean it's going to work for business B. And so with that in mind, you want to pay attention to the NAICS code that you're using, which is essentially your industry code of how it's classified, because you could have the right business model, you could have had the right business like layout, the structure, but if it's the wrong code and if you're applying with the wrong code, it's going to be an automatic trigger to the algorithm, and it could just get you automatically flagged or denied. Now, if you go like on American Express website, if you go over to Chase website, if you go to the Bank of America website, Citibank, PNC, name them all of them have their own layout of the type of code in which they classify your business under, right? Some of them do like Chase does this, where they do like a 3 drop down approach. So you'll have like what type of business or what type of industry are you in? So let's say restaurant, and then it'll give you like a subcategory that you have to pick from, and it'll say what type of restaurant is it. Example, we do, let's say it's a food truck, and then it'll have like another drop down, and it'll say, what type of vehicle are you using for food truck, and then it'll have like another classification. And that's just an example off the top of my head. But the reason why you want to pay attention to that is because each time you're selecting those classifications, they're putting you into a box, and then they're determining, is this a business that we can do essentially business with, or is this a file that we want to stay away from? So just make sure that you are paying attention to that. Again, I'll probably link the video right on here that we did on how to fill out a business credit card application. But other than that, I hope that you guys enjoyed this segment right here. Again, in the next 7 days, if you've already gone through this, like you can mash out, all of this information right here. You can probably just do that in one sitting. And if you've already kind of been acquainted with where your business is, where your credit score is, there's no reason why you can't go out like in the next 24 to 48 hours and just run through a simple sequence like this right here, right? In the next 7 days, we have clients that do it inside of the Inside Inner Circle. And I just want to see more people win. So I hope that you guys enjoyed this content. So there you have it. If you found value in this content, consider hitting the subscribe button down below and join the community. Don't forget that anytime I'm not posting on here, I'm posting over on the Insight with Irv channel, which is our podcast. So if you like what we have going on over here, you'll love what we have going on over there. Once again, I appreciate you guys checking me out. Till next time, everyone, I will see you in the next video.